Hello, dear traders. My name is Clara, and these are the main trading ideas for the current trading session. First of all, let's discuss the situation with the New Zealand dollar against the US dollar. The upside potential for the pair may be limited because the expected rate cut by the Reserve Bank of New Zealand could put pressure on the New Zealand dollar against the US dollar. The United States employment report for September will take center stage later on Thursday. On Thursday, the People's Bank of China decided to leave its loan prime rates for top-tier borrowers unchanged. The one-year loan prime rate remains at 3.00%, and the five-year loan prime rate remains at 3.50%. New Zealand's unemployment rate rose to 5.3% in the third quarter. This indicates a weakening labor market. This, together with domestic economic challenges and deteriorating inflation forecasts, points to underlying weakness in the economy. It also reinforces expectations of a rate cut by the Reserve Bank of New Zealand. The prospect of monetary easing may push the New Zealand dollar lower in the short term. The Federal Open Market Committee released the minutes of its October meeting on Wednesday. The minutes show disagreements among officials regarding a rate cut. Many participants supported lowering the target range, while some stated that they could also support keeping rates unchanged. A few participants were against any cut. The delayed United States September employment report from the Bureau of Labor Statistics will finally be released after the government shutdown. Economists expect the report to show that approximately 50,000 new jobs were added in September. Average hourly earnings are forecast to increase by 0.3% month-on-month in September. The unemployment rate is expected to remain at 4.3%. This report may provide hints about a potential rate cut next month. If the data comes in weaker than expected, it could undermine the US dollar and act as a tailwind for the pair. Next, let's move on to the Australian dollar against the Japanese yen. Traders have become cautious because of concerns about Japan's fiscal position. This caution is reinforcing a broader sentiment to sell Japanese assets. This shift followed proposals from members of the ruling Liberal Democratic Party for an additional budget exceeding 25 trillion yen to support the plan. This is significantly higher than last year's supplementary budget of 13.9 trillion yen. A new Reuters survey indicates that the Bank of Japan is likely to raise interest rates at its December 18th to 19th meeting. A slight majority of economists expect the policy rate to increase from 0.50% to 0.75%. While forecasts remain balanced, 53% of respondents expect a rate hike in December. All economists providing long-term projections expect rates to reach at least 0.75% by the end of the first quarter of 2026. BOJ board member Junko Koeda said in her Thursday speech that demand and supply indicators suggest that the output gap is close to 0%. The labor market remains tight amid a growing shortage of workers. Koeda noted that in this situation, she believes the bank should continue raising the policy rate and adjust the degree of monetary easing according to improvements in economic activity and prices. She emphasized that current economic and price trends require further adjustments in policy. The Australian dollar against the Japanese yen is also receiving support. The Australian dollar maintains its position amid rising expectations for a cautious stance from the Reserve Bank of Australia. RBA Deputy Governor Sarah Hunter said on Thursday that sustained growth above trend could trigger inflationary pressure. Hunter noted that monthly inflation data may be volatile. She also said that the bank would not react to only 1 month of data. She added that the Reserve Bank of Australia carefully assesses labor market conditions to gauge productive capacity. The bank also studies how monetary policy effects may evolve over time. The People's Bank of China decided on Thursday to leave its loan prime rates for top-tier borrowers unchanged in November. The one-year loan prime rate remains at 3.00%. The 5-year loan prime rate remains at 3.50%. Since China and Australia are close trading partners, China's policy could influence the Australian dollar. So these are the main trading ideas for now. Thank you for your attention, and don't forget to subscribe to our YouTube channel.